also hovering near record highs. Jim Iurio and Jeff Kilberg are your traders today. Jim, kick it off for us. What do you make of these market moves?
They're the same every day. We try to go down a little bit, and then people buy the dip, and it goes higher. It's been a long time. You know, for the last 8 months in the show, I've talked about being, somewhat wildly bullish. I'm becoming less bullish because a lot of good news is genuinely priced in. Even the market seems happy about these alleged tax cuts, which may or may not pass. So it seems a lot is baked in. I'm still somewhat of a bull, but all my trades are going to be shorter term, smaller sizes.
Jeff, on the last couple of shows, you said you were not willing to jump on the bandwagon here, but the market keeps going up. You ready to change your mind?
Well, Jeff, I look at the analogy of the Chicago Air and Water Show. When you see those F-16s, they go straight up in a parabolic move. Then they kind of pause for a few seconds and they come back down. I think that's what I'm anticipating because remember, in 2017, we have not had a 2% move, either to the upside or down. That's historic. We haven't seen that since 2005.
Jackie, we've been saying the same thing over and over.
I agree.
You know what I mean? So what's different about today? Bitcoin goes straight up and doesn't come down.
What's different about today is that we're about to decertify Iran. We're seeing Trump become...
we actually had an answer. Nice job.
We're actually seeing more and more administration problems with the tax reform. I think it's a culmination. We're in like day 240 of the Trump administration. We still don't have a W or a single point on the scoreboard. So I think it's all coming to a head in earnings season. So bam, there's your answers.
Okay, I like it.
All right, we got both of your views, but for more on the markets, let's bring in our next guest, former U.S. Representative Ron Paul. Dr. Paul, great to see you, and great to have you on the show again. I want your perspective
Thank you very much.
on how long this market can rally.
Well, at the rate it's going, it looks like it's going to last forever. But I'm always reminded about delusions and the madness of crowds. And sometimes it's easy to forget about that. But markets that seem to be that they can't go on forever, they don't. And I think this one will end. But my position is that the longer it lasts, the bigger the bust. So there should be some people that are uncomfortable, but since I don't trade stocks, I don't worry too much about that. I try to watch the big picture, and there's sure a lot of money out there. There sure have been a lot of monetary inflation, and it's looking where to go, and it's been in bonds and stocks and Bitcoin and real estate and all these other things. But someday it's going to go into the CRB and the commodities and the price indexes, and that's when people will get nervous. But it will end. It always does. But nobody knows exactly which day that would be. I saw some person predicting today, maybe it's going to be today.
Dr. Paul, it appears the Federal Reserve may hike rates before the end of the year, which the market wasn't necessarily expecting. Do you think slower or faster rate hikes actually could pop that bubble?
Oh, well, certainly. That's why they've been so hesitant. They're on again, off again. How many years have they talked about it? And then they say maybe, maybe, maybe. And then when they do one or two, and then they say, well, we're going to have one more this year, maybe. And then a week or so later, then they change the tone. They read another report and somebody speaks out. So I think they're in a quandary. They're in a total dilemma. I think what they're doing is totally unmanageable. And everything they do contributes to malinvestment and distortion. And that's because they control interest rates. If you control interest rates, it's the way artificially low. Everything's going to be distorted to some degree, but you don't know exactly which ones will be the worst and what day is going to happen. But they're not talking about, changing their policies on how they run monetary policy. It's just on again, off again. But most people admit we've never been here before. The world's never been here before, where it had been totally engulfed by a fiat currency. And the dollar standard, I think, is under threat because someday something else is going to replace it. Not tomorrow or the next day, but it isn't so much as something will come up that'll be so much better as much as there will be a day when people will lose confidence in the dollar. And when you look at foreign policy events and some of the other things going on, I think we're very vulnerable.
Dr. Paul, when the correction comes, how steep do you think it can be?
Well, I think it's going to be very steep, but that again is going to be dependent on what happens to policy and whether they say, well, we're going to clean up our act and we're going to quit doing this. But that's not likely. I mean, it was terribly steep, and it was a terrible problem in 08 and 09. and they were able to bail out with trillions of dollars of money, increasing more debt and propping up a system that is deeply flawed. I don't think they're going to get away with that this time. And so it could be serious, percentage-wise is only a guess, but I think people will hurt because the correction will have to occur. And the money will be there. It's always going to be there. Fed is never going to give up with that. It's just what are the people going to do with it until producing and creating all this new money will cause a loss of confidence in the dollar. That is the ultimate test. When will the world and the investors lose confidence in the dollar and decide, I can't have a bond that's paying me 2% or, interest rates in less than 1%. This is ridiculous.
Dr. Paul,
they give up on the dollar.
If you had to give it a percentage, what would it be?
Well, I've had a couple of times. I wouldn't be totally surprised, which I've said in the past. If it goes down 50%, I wouldn't be totally shocked that it would go down that low. But who knows?
Okay. Jim Uriel has a question for you.
Dr. Paul, from what you said, it seems like you think it's appropriate for the Fed to start hiking rates. If you were a Fed voting member, would you just say asset prices be damned, it's time to raise rates regardless of what happened? What would you do if you were chairman of the Fed right now? And don't say quit.
Well, that would be my first thought because it's a non-functioning, it's an impossible situation to be in. But I would say go to the market. Just quit buying debt. Don't participate. Don't participate and rig the interest rates. Don't pretend you know what it is. And if you did that policy, obviously interest rates would go up very high. And that would be the end of the current situation. The big challenge is, which I don't think they have an answer, is myself, I don't even like central banking. But I don't call for tomorrow close the bank down because I know what that would do. And I have theoretical ways that you would have a transition. And the big question, could you have a gradual transition where you could get away from the Fed setting these interest rates? You could, but they're not going to because there would be some pain and suffering. It's sort of like, how do you repeal Obamacare gradually? It doesn't happen. Once they get locked in, and the central bank cannot give up on this. They would have had a little bit of a chance in 08 and 09, but what they did exactly the opposite, and they'll continue to do that until they lose confidence. But no, what I talk about, if they even leaned in the direction, it would be raising interest rates. But I would say I'm not raising interest rates. I don't know what the interest rates should be. But if you stop buying government debt, if you stop monetizing debt, you would curtail the growth of government. It would be, a real blessing to the market. But obviously, interest rates would go up and maybe dramatically.
I'm going to give the last question to Jeff Kilberg.
Thanks, Jackie. Dr. Paul, always wonderful to have you here. I'd love for you to weigh in because the temperature of the conversation of the new Fed leadership, this new Fed chair being replaced, Kevin Warsh seems to be leading the pack right now. What's your opinion on him as he's been highly critical of the Fed like yourself?
Well, I don't have a perfect opinion about him because I've read, some of the excerpts, and he's had some criticism. And I guess when you're talking about the average person that might be appointed, I don't think I would all of a sudden think that my job is to be dedicated to try to prevent his appointment. I want to, work more on the policy. But I would say no worse than any other, maybe a little bit better. But certainly it doesn't encourage me to lead the charge and try to prevent him from going in, because believe me, there are a lot others that are a lot worse.
Dr. Paul, thank you so much. Great to see you again.
You're welcome.
We'll talk to you soon. Jimmy, you're trading the S&P E-mini for me. He says a 50% correction is coming, but we don't know when. So what do you want to do today?
We don't know when. I think you got to make hay while the sun shines, and it's shining. I think if you could buy it at 25.52, at the time I was thinking about this, it was a little above where the market was. I think it's right about exactly there now, with a target at 25.65 on the upside, a stop place below 25.45. If you guys, people who watch this show a lot, are going to realize my trades are beginning to get smaller and smaller here. I do think we're in the late innings of this. This is, I want to be dating, not engaged or married to the stock market right now, because I think it's getting a little long in the tooth. But I think right now is not the day to call it and say, okay, all of a sudden we're going down. We could have done that a million times before and it never worked.
Jeff?
I would say this trade, even though I don't agree with the direction, it's looking good, Jimmy. It's a
Okay.
cute trade, if you will. And why I'm saying that is look
why
at
I'm
the
dating
stop
it.
level. That's why he's dating it. But 25.45, that's the exact level where we have seen the Bulls just defend, or I should say the Bears have no guts. So if we can get under that, maybe there's a retracement when we come off this parabolic move. Because if you look at the chart, there is a back and fill moment all the way down to about 24.30, if you will. But right now, I think his trade is okay, but I do not want to be a buyer here. I want to wait for that break if it's tomorrow, next Wednesday, or sometime in the next 6 days, or 60 days, I should say.
All right, let's get the risk reward on this trade. Gentlemen, Jim is buying the S&P E-mini at $25.52, targeting a move to $25.65. Since each point in this trade is worth $50, he's risking $350 to make $650.